Hello, everyone, and welcome to How to Short series. Unleash your trading instinct. We're shorting Apple. We're shorting NVIDIA. We're buying Apple. We're buying NVIDIA. We're doing it all. We're just following the markets. There's setups, and we're executing trades around those setups, and we're teaching you how to do that. Before we get into the charts, let's take a look at our guidelines. Absolutely critical because this is the framework in which we choose on when to short or when we should look at these shorting stocks. So we want them to be at all-time highs. NVIDIA and Apple's are at all-time highs. They look like they're pivoting. So we could see strong selling pressure on one day or the next, and we figure that out by different time frames. You're going to see me flipping from 5, 15-minute charts, 1-hour charts, 2-hour charts, daily charts, and that's where we identify certain levels of where we think it can go and pull back to, right? And I help you navigate that. So let's jump in on the chart. Remember, this is not financial advice. This is just me showing you my strategy, the inner workings of my mind on how I pull profits from the stock market on a regular basis. And here we go. We have Apple here. And I think, was it Apple or NVIDIA? But regardless, I did, these breakdown candles are important numbers. Like if I go on the 1-hour chart, there's some important numbers here. Breakdown candle high here, important. This is all-time high, important. Maybe on, what was this? Maybe half-hour chart? What is this? So yeah, here's another breakdown candle on a 30-minute chart. So on various charts, there's, and if you look here on a 30-minute chart, you have this choppity chop here, right? It is a breakdown area. So you can see that it's also important on a 30-minute chart, but it gives you different perspectives. So we said in our previous video that if we start closing, on a 5-minute candle basis over 147, you had the 1, 2, 3, 4, 5-minute closes, which is about a 15-minute candle. That would be your signal to buy, and you could have bought, but I wasn't, paying attention at that time, and it had already ran up about 147 around. This is when I noticed it. So, what do we do? What is our other strategy? Is shorting, and we short at breakdown candles. And if we go, is it the 1-hour chart? This is a breakdown candle. We were pretty close up in there at one point in the morning, right? So I figured that if, that's about as high it's going to go for the day. My risk was limited. So let's go back to the 15-minute chart. After it back down like this, I said, well, I think we'll take a look at the spreadsheet, but around 147.50, I was risking about 50, 60 cents. I'll take that risk for about a dollar or more, because eventually it has to fill this gap, and it eventually has to fill this gap. So we're taking the risk for it to sell off on some weakness to fill those areas and retest for only about 60 cents. So that's why it's important to go through these time frames and really identify these breakdown candles. That's basically the biggest learning curve. Get the highs, get the lows. This is a gap area, so this particular number 145.50 is important. And now we've closed back under this 147. So I don't think this is good news for the bulls, in my opinion. I closed out the position. By the end of the day, I was up $1 a share, so I closed it at the end of the day. We did have a bullish flag here, but now that we closed below, we could see lower prices tomorrow. So we could see a retest back down. So we'll see. If we open high, we gap and crap here, and we hang out below here for some time, these areas will be really good to trade against for it to come and fill this gap down here. We're still short from 148.70. We still have that short on. So let's go take a look at our spreadsheet. So you can see this information. So let's flip it over here. Bang. There we go. So you can see this. We're still in this position here. We have 40 shares, 30 shares. We did another trade here from 147.60 to 146.60. $60. So that was $120 in profits for the day. Not bad for some strength in the morning, but mostly sideways for the day. So that's not going to complain at all. All we're doing is investing about $8,000, and what you would need is most accounts have at least 50% what do they call it, margin. So, really all you need is maybe 4,500, right, to do this trade. So if you look at your ROI, if you look at a calculator, oops, sorry. If I look at it, I'm just going to pop a calculator up here. So we have 60 on 4,500, right? So that's 1.33% return. And if you do that every day, that's 30%, right, every month. And then that compounds, right? So in the end, these little trades that we're doing, can help grow your account, and it compounds. And maybe I'll do a video on compounding depending on the comments. But those were our trades. We did learn some lessons about that we added here. Sorry, I gotta remove this. That we added in our gap and short selling lessons about size, and we're continuously working on improving our fundamentals and refining it, so you can learn how to do this strategy step by step, and have my guidance. And we have trades here that we're doing, and I might do a video on that just to show what you can expect if you're a Patreon member. We're just doing Apple and Nvidia on Facebook, on YouTube. But there are other trades like Amazon. I think we're up $100 a share on Amazon. We shorted Myrna and we got $10 a share on Myrna by shorting it, and we still have a short position on Myrna right now. And then there are other ones that are coming to fruition, and we're monitoring that. So if there are other opportunities in the market. So there's not just Nvidia and Apple, but we're just showing how you can really carve out a living on just following two stocks, right? It just depends on the size. So again, thank you for watching. See you tomorrow.